Suppose there are two partners, A and B, and they were sharing their profits and losses in the ratio of 3:2. And this was the balance sheet as on 31st March 2010. On liability side, A's capital 30,000 rupees, B's capital 30,000 rupees, reserve fund 10,000 rupees, creditors 10,000 rupees, and the total is 80,000 rupees. And on asset side, building 40,000 rupees, cash 15,000 rupees, profit and loss account 5,000 rupees, furniture 20,000 rupees. And C comes as a new partner for 1/4 share. He brings 30,000 as capital and 5,000 for goodwill. And at the time of admission of C, it was decided to appreciate building by 20% and depreciate furniture by 10%. So you are asked to prepare new balance sheet of A, B, C. Now the thing is, how will you handle this question? Whenever there is question of admission of a new partner, you have to take the following steps. First of all, set the ratio. I mean to say old ratio, new ratio and sacrificing ratio. And after calculating ratios, you should distribute all the accumulated profits and all accumulated losses between the old partners. Accumulated profits are always on the liability side and all accumulated losses are always on the asset side of the balance sheet. Then you should pass the journal entries of revaluation account. And after that, journal entries for the admission of a new partner, because he is going to bring cash for capital and goodwill. And after that, prepare revaluation account and calculate the profit or loss from revaluation account. And after that, prepare capital accounts of all the partners, I mean to say old partners as well as the new partner. And after that, prepare cash account, and after completing cash account, prepare the new balance sheet of A, B, C. So these are the steps you have to take every time whenever you find the question of admission of a new partner. So first of all, there are three partners, A, B, C. I'm going to calculate all the ratios. So old ratio was 3:2 and the sacrificing ratio will be 3:2, as I have already explained you in my previous segment. If the question is silent, there is no additional information about the ratio. Old ratio and sacrificing ratio is always same. Now the new ratio, you know the shortcut. C is coming for 1/4 share, and what's the difference between 1 and 4? That is 3. And 3 multiplied by 3, 9. 3 multiplied by 2, 6. And then 3 plus 2, that is 5. 5 multiplied by 1, 5. So the new ratio will be 9, 6, 5. So we have set the ratios, I mean to say old ratio, sacrificing ratio and new ratio. First of all, distribute all the accumulated profits. And on liability side, we find there is reserve fund of rupees 10,000. So we have to transfer this balance, I mean to say the amount of reserve fund, to the old partners. And whenever there is involvement of old partners, no need to say, old ratio will be utilized. So reserve fund account debit 10,000 rupees to A's capital to B's capital, and the old ratio was 3:2. So the amount will be 6,000 and 4,000 rupees. And then look at the asset side. Is there any accumulated loss? Yes. On asset side, there is profit and loss account rupees 5,000. This is accumulated loss. You know it better that accumulated losses are always on the asset side of the balance sheet. So this is the accumulated loss. This will be transferred to old partners in the old ratio. So what will be the journal entries? A's capital account debit, B's capital account debit to profit and loss account. So A debit 3,000, B's capital account debit 2,000 rupees to profit and loss account 5,000 rupees. One thing more I would like to explain you here, that on asset side there is profit and loss account. It means it has got the debit balance. So if you want to remove this figure from the books, you will have to credit it. That's why I have credit profit and loss account by rupees 5,000. So I have removed the profit and loss account from the balance sheet. Now the journal entries for revaluation account. You know, there are two changes in the assets and liabilities, and that is building has been appreciated and furniture has been depreciated. So first of all, we'll pass the journal entry for building has been appreciated by 20% of 40,000. It means that is 8,000 rupees. So the journal entry will be building account debit to revaluation account, that is 8,000. You know, whenever there is increase in the value of asset, it's a gain. And you know, revaluation account is a nominal account. Whenever there is profit or gain, the nominal account is credited. That's why we have credited revaluation account by rupees 8,000. Secondly, building is, I mean to say, the value of building is going up by rupees 8,000. Building is an asset, so it has got the debit balance. If we want to increase the value of building in the balance sheet, we will have to debit building account. So we have debited building account by rupees 8,000. Now we have to depreciate furniture account. So the journal entry will be revaluation account debit to furniture rupees 2,000. At this moment, we are passing all the journal entries. So we'll leave the blank space for the loss or profit, because at this moment I cannot prepare revaluation account, because at these moments we'll pass all the journal entries. Now the next journal entry. Now C is coming as a new partner and he brings 20,000 as capital and 5,000 goodwill, total 25,000. You know, whenever the new partner is admitted, he becomes entitled to the assets of the firm. That's why he brings capital and he has brought rupees 20,000 and he has to bring cash for goodwill. Now the thing is, why he is bringing cash for goodwill? Because whenever there is admission of a new partner, the new partner gains and the old partner sacrifices. So always this is the principle. Gaining partner has to compensate the sacrificing partners. And how much? It always depends upon the value of goodwill. So it's clearly written that he is bringing 5,000 as goodwill. So it means the goodwill was calculated and the 1/4 of the total goodwill was rupees 5,000. That's why C is bringing rupees 5,000. Now the journal entry has been done. Cash account debit to C's capital account 25,000 rupees. You know, out of this 25,000, 5,000 rupees is for goodwill. It means this money, I mean to say 5,000, belongs to A and B. The reason being, A and B are going to sacrifice in favor of C. So what will be the journal entries? We will debit C's capital account by rupees 5,000 and to A's capital, to B's capital, 3,000 rupees and 2,000 rupees. We have debited C's capital. What it means? We have taken amount out of C's capital. In this way, C's capital will be reduced by rupees 5,000 and this amount is going to A and B's capital, that is 3,000 and 2,000. This money has been distributed in the ratio of 3:2. That is the sacrificing ratio. This is called adjustment entry for the goodwill And this journal entry is always passed in sacrificing ratio. Be careful. Sacrificing ratio is used only in one situation, and that situation is when you pass the adjustment journal entry for goodwill. I mean to say C's capital account debit to A's capital to B's capital. Now you can see all journal entries have been passed. Now we'll move to ledgers. First of all, prepare the revaluation account. So revaluation account, it's a nominal account. On credit side, we'll write down buy building rupees 8,000 because it was a gain. Whenever there is gain, you will have to place the amount on credit side. I mean to say you will have to credit revaluation account. And the building was depreciated. It was a loss of rupees 2,000. If you look at the journal entries carefully, the journal entry was revaluation account debit to furniture rupees 2,000. And on debit side to furniture rupees 2,000. Now the total of the credit side of revaluation account is rupees 8,000. And the balancing figure on the debit side is rupees 6,000. This is basically a profit on account of revaluation account, and this gain or profit will be transferred to old partners. I mean to say A and B in the old ratio. Whenever in any transaction, in any journal entry or ledger, old partners are involved, we always use old ratio. We use the sacrificing ratio only in one instance, that is adjustment entry for the goodwill. So let's go back to revaluation account, to A's capital to B's capital. In the inner column, you can write down 3,600, 2,400, and in the outer column, rupees 6,000. So the totals on the both sides is rupees 8,000. Now be careful. After completing the revaluation count, we have to complete the journal entry, because when we were passing journal entries, we had left one space for the journal entry, because at that time we didn't know how much was the profit or loss on account of revaluation account. So we are going to pass the journal entry now, that is revaluation account debit to A's capital to B's capital, that is 6,000, 3,600, 2,400. This profit has been distributed in old ratio. Be careful, I'm not writing down all the narrations, but in your exams or in your homework, you must complete the narration. Otherwise, your teacher won't give you good marks. So now we will prepare capital accounts of ABC. To make the question convenient, I strongly suggest that you should prepare columnar capital accounts. I mean to say on credit side, you prepare 3 columns for A, B, C, and in the same way on debit side, you should prepare the 3 columns A, B, C. So on credit side, these all plus items are placed on the credit side of capital account. So buy balance BD 30,000, 30,000. Buy reserve fund 6,000, 4,000. Buy revaluation, it was profit, you can write down. I think you must write down profit in the inner column, in the bracket 3,600, 2,400. And then buy cash. In inner column you should write down fresh capital, and in C's column you should write down 25,000 rupees, because he has brought 25,000 rupees. And then out of 25,000, 5,000 was taken from C's capital account and it was transferred to A's and B's capital account. So on debit side, to A's capital to B's capital, and in C's column you should write down 3,000 and 2,000 rupees. In the same way, because A's and B's capital has been credited, so you will have to write down on the credit side by C's capital, and in bracket you should write down goodwill, because this was the share of goodwill that was transferred from C's capital to A's and B's capital, that is 3,000 and 2,000 rupees. So in this way, on credit side, the total of A's capital is 42,600, 38,400 and then 25,000 rupees. And on debit side, you have to write down two profit and loss account, 3,000 and 2,000 in the A's column and B's column. And then two balance CD, 39,600, 36,400 and 20,000 rupees. So in this way, the totals on the both sides are 42,600, 38,400 and 25,000 rupees. Now prepare cash account. You know, on debit side we write down receipts and on credit side we write down payments. So to balance BD on debit side 15,000, to C's capital 25,000 because 15,000 we had it at the time of admission and we got 25,000 from C. So the total is 40,000 rupees and by balance CD 40,000 rupees. Now prepare the balance sheet. Whenever you prepare the new balance sheet, you should keep the opening balance sheet before you so that you don't miss out any item. So building, previously it was 40,000, now it is 48,000. Cash, previously it was 15,000, now it is 40,000 rupees because the closing balance of cash account is 40,000. Furniture, now it is only 18,000 because previously it was 20,000, it was depreciated by 10%. Now it is only 18,000. So the total is 1,06,000. On liability side, we'll write down the capital accounts. Previously there were only two partners, A and B, but now there are three partners, A, B, C. So we can take all the closing balances from the capital accounts. A's closing balance was 39,600. B's closing balance is 36,400 and C's closing balance is 20,000 rupees. And there was one item of reserve fund on liability side, but it has been distributed. I mean to say it has been transferred to the capital accounts of old partners. Now it is no more. And creditors, previously its value was 10,000 and still it's the same value, that is rupees 10,000. So in this way, the total on both sides is rupees 1,06,000. It means our question is all right.